So fundamentally, the problem with Ethereum is they keep changing it.
In today's video, Microstrategy CEO Michael Saylor describes Ethereum as obvious security since the team of developers can decide to make changes to the network without the approval of the participants. He adds that anything that can be described as a commodity in the crypto space will have similar qualities to gold, meaning no team of developers comes to decision makers and no hard forks upgrade that changes the way the network behaves. Let's dive into the interview.
I think Ethereum's a security. I think it's pretty obvious it's a security. It was issued via an ICO. There's a management team. There's a pre-mine. There's a hard fork. There's there's continual hard forks. There's a difficulty bomb that keeps getting pushed back. The difficulty bomb is going to wipe out the entire ETH mining industry. It's going to obliterate it, murder it, okay? The fact that somebody is able to murder an entire industry and then they keep changing their mind every 6 months about whether to do it or not do it is indicia that it's a security and not a commodity. For it to be a commodity, there can't be an issuer. And the truth is you can't really make decisions. I mean, one of the fundamental insights in the crypto industry is the fact that you can change it is what makes it a security. So if you look at most of these cryptos where they have hard fork after hard fork after hard fork, the problem with a hard fork is that changing the protocol means that some development team is making a decision. And if you can change the protocol in a material way, you can change the monetary protocol, right? A hard fork can change the issuance pattern or can change the value of something. And so that makes an investment contract under securities law. And that means it passes the Howey test. So what you want is a completely decentralized protocol where nobody can change it, even if they wanted to change it. So fundamentally, the problem with Ethereum is they keep changing it, right? From a securities law point of view. Right? And there's a team of people that make recommendations. And if you want to establish yourself as a digital commodity, then you're trying to create something like gold in cyberspace. So for example, no gold miners in the world could change the physical characteristics of gold. Right? If a government passed a law, I mean, they wouldn't send an email saying, oh, gold is now steel, or steel is now aluminum, right? You can't, if you can change the characteristics of it, right, then it's not a commodity, it's a security. And securities have a place in the world, but they need to be sold to the general public pursuant to a disclosure, full and fair disclosure. You want to take a company public, you have to disclose who owns the company, what are the risk factors, and that way people can make a decision. Problems I see right now, it's like, you've still got the ETH locked up, and will the merge take place? Will it not take place? And then after it takes place, then the question is, how long is your ETH locked up? And then is there a staking reward? And what is that? And if there is a staking reward, it's probably a security. The head of the SEC has said on 6 different occasions that if you generate staking off of a crypto asset network, it makes it a security. You can't generate yield and not be a security. So, I mean, in theory, you can create another digital commodity, but you can't leave questions unanswered. Oftentimes, people in the crypto industry, they think, well, we'll just resolve this by taking a vote. Taking a vote doesn't make something decentralized. If 51% of the people vote to double the supply, or like if you look at the Solana thing, Solend last 2 weeks ago, the fact that you can vote on something is proof that it's a security. For example, my company votes on things. Shareholders vote on things. When you take a shareholder vote, it doesn't make you gold, right? There's no way that the gold owners or the gold miners could take a vote and convert gold into aluminum, you see. And if I owned a bunch of lumber, I couldn't take a vote and turn the lumber into steel, right? So ultimately, the challenge with these things is the ability to do anything. If it's truly decentralized, then you have to release the protocol into the world and not change it, not even contemplate changing it. In fact, one of the big problems with all these proof of stake networks is, in order to get them to work, they have to keep doing hard fork after hard fork. And the reason they're doing it is because they're putting the security into the software instead of into the hardware or into the physics. If you're relying on the physics of the network with proof of work, then you don't have to keep upgrading the software. If you keep upgrading the software, then someone's got to write the software. And when you write the software, you end up with this exploding complexity. And then you have to keep changing it. And so this pursuit of functionality and performance via continual upgrade, that makes you a software company. And there's nothing wrong with software companies. I have a software company. I have more experience writing software than anybody in the crypto space. I've been in the software business since 1989. So I've actually seen what happens when you upgrade software every year, 25 years in a row, right? And, it makes you a company. You end up, and if you're a company and you want to go public and you want to sell your shares to the general public, you have to do it with a registration statement. So that's the challenge in the crypto space, that really they're just all securities. And the problem with it is they're all securities trading on exchanges that don't have a license to trade securities, and they're being traded by management teams that haven't issued a registration statement, which means they're non-compliant securities. So what will happen? Nobody knows what will happen. I don't know what will happen. But what I know is there's a lot of uncertainty. So you're either a speculator or you're a venture capitalist, and you're waiting and to see what will happen. And Bitcoin is different because it's proof of work based. And ultimately, there was no ICO, there was no pre-mine. Nobody could change it. Nobody wants to change it. It doesn't need to be changed, right? And so you would generally think, you got to think more like genetically, like something that got released into the wild 300 million years ago, and the DNA is the same. That's what you're trying to do with a crypto asset network. You're trying to release a protocol and not change it. The point at which you consider trusting a crypto network is somewhere in the range of 5 to 10 years after people stopped changing it. So if you keep changing the thing every 6 months, you can do it, but the problem is, A, someone changed it and somebody voted on it or did it, and that makes it a security. And if they've got a vested interest in it, right? You've got a management team and an issuer, and that means you can't be a commodity.